There is so much going on in the market, and I'm sure you have got a lot of questions today. Steve Brennan has got the question for Joe at this time.
Some people have drawn a comparison between the Magnificent Seven, the largest stocks that really have been, to a large extent, driving market performance, maybe having some disproportionate number of the gains, to the Nifty 50, when you had a lot of brand name companies dominate the index and set themselves up for a fall where, some of them maybe as much as 80% or maybe just 60%. From peak to trough in that 73, 74 bear market where they just kind of imploded. Do you see any comparisons there? Are we in another type of kind of bubble of brand name companies where the valuations have just gotten out of whack?
Well, first of all, if we are we really down to 7? We had 50 in the 70s. Now we got 7. Geez, I don't know. I think we're going backwards or something. I've had a lot of people ask, hey, these things, is this a bubble? Is this back to .com stuff? Is this another bubble? AI, the Magnificent Seven, which the Magnificent Seven is kind of interesting, right? We had FANG for a while, which was FAANG, except N was Netflix. Now it's NVIDIA, I guess. I don't know. Netflix is not in favor anymore, although the stock continues to do well. We've actually owned some, but it's not in the Mag 7 anymore, I don't guess. But anyway, a lot of people have asked, is this a bubble? Certainly these stocks have people have very, very high expectations for these stocks. Let's talk about that term bubble. What is a bubble? I actually hate the term because you don't know that it's a bubble until later. You only know it's a bubble when it crashes. And what I mean by that is, look, the available information we have about AI is kind of thin. So we don't know a lot of things. And of course, we never know the future. But my point is that we don't know. NVIDIA could be the biggest company that ever exists on the planet. We don't know. Well, actually, it was for a while. But anyway, I mean, it may be the greatest thing since sliced bread. We don't know. Maybe Microsoft is going to find ways to apply artificial intelligence in ways that people haven't thought of yet. And it's well worth the 30-something times earnings that you have to pay to buy the stock. We don't know because we don't know how things are going to turn out. But usually what happens, listen, here's the thing. Every time you get some kind of technological innovation, this kind of thing happens. And you can go back decades, maybe even hundreds of years to see the same thing. Go back to the late 1800s, you had a railroad boom that ended up in a bust. We had hundreds of railroads that all of them couldn't be successful, and ultimately you had a bust in that industry. You had in the early part of the 20th century, you had radio. RCA was the most valuable company on the planet in 1929 because of radio. We had other things along the way. In the 1970s, the Nifty 50 that you mentioned, a lot of the Nifty 50 were actually technology companies. The 60s was the go-go 60s, and it was a lot of technology stocks. Everything with Tronics in the name, went up. We had in the 70s, then, you can always look at things the way they are right now and say, this is obvious. This is so obvious. This is what you have to do. And so in the 60s, it was obvious. You had to buy this new technology stuff. You had to. And you had these other companies that were going to dominate. They were always going to dominate. Sears and J.C. Penney and places like that. Nobody saw this little company called Walmart up in Arkansas until later on. So it doesn't always work out. You go to the late 70s, it was oil stocks. Man, you had to own oil stocks. Oil stocks represented almost, well, not quite as much, but over 20% of the S&P was in energy stocks back in 1979. So we always see this where people get overexcited and they think a trend is going to last forever. And it just never works that way. But let's go back to that Nifty 50 because I made a list here. Now, the Nifty 50 there was never a specific list of 50 stocks. There were a list of stocks that came from JP Morgan, I think, and there was a list of stocks that came out of Kidder Peabody, which is a firm that doesn't exist anymore. And so, but if you look at these companies, and you're right, that 1973-74 bear market, which was associated with a recession, man, that just killed these stocks. Some of these things went down 80-90%, and some of them never came back. But let's take a look at this list here. We have American Express, Anheuser-Busch, Bristol-Myers, Coca-Cola, Dow Chemical, Eli Lilly, GE, Halliburton, IBM, International Flavors and Fragrances, which is one of the greatest stocks of all time that people don't know about. Johnson & Johnson, 3M, McDonald's, Merck, Pepsi, Pfizer, Philip Morris, Procter & Gamble, Texas Instruments, Disney. Those were all part of the Nifty 50. These were not bad companies. And there is if you had bought these stocks during that period prior to 73, prior to the bear market, if you bought them near the high valuation, if you went out 20 years, you still did okay. You still lagged the market, but you didn't do terrible. The point is that technological innovation matters, and it's not always going to be the leaders at that time that win. Why? So let's look at some of the other ones that are on that list. Eastman Kodak. Yeah, that didn't work out so well. That ultimately, I think there's a stub piece of Kodak still trading somewhere. I'm not sure what they do. There was Polaroid, another photo company. It was innovation, right? Remember the instant photos? Yeah, that's not around anymore either. Revlon, nah. Schlitz, Schlitz beer. Is Schlitz still around? I don't know. I know Pabst Blue Ribbon is. I'm not sure about Schlitz. Sears went bankrupt. Kresge. Who remembers Kresge 5 and dime? That was one of the Nifty 50. Okay, it's kind of like Woolworths. There's another one that's not around anymore. Why? They got put out of business by Walmart. And here's one that really surprised me that was on the list. Simplicity. You guys know what Simplicity was? How about you, Bob? Do you know what Simplicity was? What did they do? No clue. Yeah, Simplicity made patterns for people who wanted to sew their own clothes. Why exactly that was in the Nifty 50 and why people thought that was going to last forever, I have no idea, but it was there. And I don't know if I believe Simplicity is still around, although my sewing machine is in storage, so I'm not sure. But the point is that innovation matters, and you get these people get excited about this stuff and they bid these stocks up, and a lot of them are going to be worthless. A lot of them are not going to be worth what people think they are. Is Super Microcomputers some special company that's going to be worth a lot? I don't happen to think so, but we'll see what happens. I think it's just a server company. And there's plenty of people that know how to make servers. You talk to Hewlett Packard about that. There are companies today in this AI atmosphere, this AI bubble, if you want to call it that are not going to be here 10 years from now, 20 years from now. They're not going to be a good investment based on where they are right now. And I also would say, too, that if you're looking at the S&P 500, where you've got a large a portion of the S&P 500 invested in these stocks, that's not going to work out well either. It means that the index, because you've got a high valuation on the index, it means future returns are going to be lower, unless the reality is even better than people think it is, which seems hard to believe. But the bottom line is this, guys. We don't know when things are a bubble, and we don't know when they're going to pop. We don't know what's going to cause it. It is oftentimes economic and has nothing to do with the stocks themselves. In 1929, RCA, by the way, RCA's stock price hit like 114 or something like that in 1929. It only recovered that price in 1986. 86. And the only reason it did then was because GE overpaid for it, because RCA, if you remember, you probably don't because I'm old, RCA owned NBC, among other things, among other assets, and GE wanted NBC. Otherwise, I don't think RCA would have ever recovered. Some of these things never did. Like I said, Eastman Kodak, Polaroid, some of these companies never recovered. Some of them hung around for years just being dead money, Sears and JCPenney and so forth. So we don't know what companies are going to succeed. We can look at them. We can do analysis on them. We can try to find the right ones. But the reality is that we really don't know. And I will just tell you what I've done in every bubble that I've been involved with, or I've seen personally, which goes back to the 90s. The early 90s, we had a biotech bubble when anything with bio in the name went up. And it didn't matter what the hell it was or what they were doing. If it was bio, it was going up. And then we had the dot-com boom, and then we had the real estate boom, and then now we've got AI. And I will tell you what I've done every time, which is let it go up. Maybe you participate some on the way up. But once it gets to the ridiculous level, and that's hard to judge, by the way, you don't know where ridiculous is, but you do your best, and then you let it go. And it will come back to earth. It will crash. And once it crashes, then you pick through the debris and you find the things that survive, and you buy those things. And you don't have to be in a rush. Look, we know if you bought Amazon at the bottom of the dot-com bust, you made a bunch of money. even if you bought Cisco at the bottom, you made a lot of money. Now, if you bought Cisco at the top, you're still waiting to break even. But there's lots of things that came out of that .com boom that turned out to be great investments. Same thing with the biotech boom in the early 90s. Amgen, Biogen, Genentech, and all these companies that came out of that. So don't get excited that you have to chase this thing. And I'll just go back and reiterate one more time what we talked about yesterday with Sir Isaac Newton. Sir Isaac Newton got FOMO. He got fear of missing out, and he ended up losing a bunch of money in the South Sea bubble because he didn't wait for the crash. He got out, he made a bunch of money, and he couldn't help it. He had to get back in because everybody else was making money. It was envy, whatever you want to call it, but he couldn't stand it, and he had to get back in. And then he couldn't get back out, and he ended up losing all of his money. So you got to wait for these things. You got to wait for them to come to you. Ultimately, good companies will survive, and they will be available at a reasonable price. You don't have to overpay. So I don't know if the AI stuff is a bubble. I don't know how that's going to work out. I would say that the expectations for those companies is very, very, very high. And if it's not realized, then the stocks will get killed. It's just a matter of time.
We want to hear from you. Make sure you send us your questions.